reversal here. So a bit of consolidation and then reversal. So put my 1 here because it's higher, higher low. 2 and then 3. There wasn't an immediate entry here, so I just kind of left it for now. And then moved on to the next one. And feel free to stop me at any point in time. So I'll just walk you through the second entry that I noticed. I put 1 here again because it's a higher low, 2 and 3, and then at the 2 I drew the vertical line and flagged the entry here. And then same thing again, reversal.
Or the continuation, was that the continuation there?
Yeah, that was the continuation. Yeah, sorry.
Yeah.
This was the continuation, so I did 1, 2, and then entry here.
Okay.
Okay, so then I didn't draw this one because there was no clear trend. I started back off here again. Higher low, 2, 3, and then entry.
Okay.
And then moving on here, a reversal. So lower high, kind of.
Yeah, it is.
Here.
Yeah.
And then 2, 3, and then entry here.
Okay.
So those are my entries. I also drew the support and resistance on the hourly. That's a green. And then lastly, the new topic here, which I guess I can ask questions on, is like the not horizontal support and resistance.
The trend lines.
This one across in blue. The trend lines.
Yeah.
Across here for this one because there's a few touch points. 1 here, and then 1 here,
Okay.
sort of here. So I do that, and then I do the same thing on the other side. Yeah.
Yeah, you see when that trend line, the bottom trend line, when it stops being respected, price goes down. Right? To the left of that, it was respecting that trend line, touch, bounce back, but as soon as it breaks it, it goes down. Yeah. So that's why we have those trend lines, right? It's some of them are stronger than others, but you have them so that you have some visual representation there.
Yeah. Okay. Is it kind of useless after it breaks it? Like, so this trend line is useless after it breaks it.
No, it's not useless because then it acts as the opposite side, right? It acts as resistance or as support depending on which side was broken. So it's really not useless. But after it crosses like that, then for me, I just start to draw new ones.
Okay.
Because then I don't see anything clear.
Yeah.
So I have a question for you, though. I like what you did. I think it's pretty good. But my question is, and Manny did the same thing. Why do you guys start with the hourly chart?
You mean for support and resistance?
For any of it.
I think because I thought we discussed that last time, but I could have misinterpreted. We should focus on the hourly, given like time constraints in terms of, we can draw the daily and weekly, but I guess it wasn't. I don't know. I guess I don't know is the right answer.
So let me help you a little bit there because of what you said about time constraint. Time constraint is like during work hours not having the ability to monitor trades every 5 minutes, right? So that's what I mean by time constraint. So as a result, we're going to use the 1 hour chart to pull the trigger, which is great, right? And what you have done here is not wrong. However, it is always good to start with the higher time frame, right? If you start with the weekly or even the monthly and see where is that trend, and I want my hourly trigger to follow the bigger time frame trend, right? It's good to know. If the monthly is in an uptrend, you don't want to fight it.
Yeah.
right? So you want a confluence between monthly, weekly, daily, hourly. When all of them are lined up in the same direction, you pull the trigger. So what you're looking for is monthly, weekly, daily, for example, to point up, the hourly to point down, and now you're looking for the hourly to finish the pullback, turn around in that upward direction to follow the rest, right? So that's the idea why you look at all time frames. So the monthly you don't look at daily, right? If you look at it once a month, you pretty much have an idea for that whole month what is happening, right? Even a whole quarter, you might say, you know what, we're in the middle of the previous month, so I don't really need to worry about it. And then as you go down the time frame, that's where you have more and more precise entries. But again, the idea is you want to follow the trend of the bigger time frame.
I see. Okay.
And so by bigger time frame, the way I calculate this is if my hourly chart is my pull the trigger chart, multiply that by 5 is 5 hours. It's roughly a day, because a day is 6.5 hours of cash equity market. Like the futures trade almost 24 hours, but the cash equity opens at 9:30 a.m. New York time, and they're done by 4 p.m. New York time. So those 6.5 hours, I consider them roughly 5 times my hourly chart. So that's my next chart. 5 times daily is a weekly chart, Monday through Friday.
Okay.
And then 5 times weekly, roughly a monthly chart. So that's how I envision how I look at the time frames. The reason why I'm giving you this, if someday you say, you know what, I have 2 weeks of vacation, and I'm going to do, 5-minute chart during these 2 weeks, like, because you have the idea, you're become an expert on where to pull the trigger. Then you say, okay, 5 minutes times 5, 25 minutes, roughly 30 minutes, times 5, is 150 minutes, roughly 3 hours. So you can start to look at those time frames when you want to go down to a lower time frame. So keep in mind, you pull the trigger times 5 times 5 times 5, right? That gives you a good idea on where to start. So, but in general, what you have done is good, right? So that's I just wanted you to have that perspective.
I have a quick question.
Sure.
Would you always draw the whole? Would you just draw your support and resistance lines on the daily, weekly, monthly, or would you also draw your lines
on the hourly?
On the weekly, daily, and monthly.
Yeah, so
would you just draw your hourlies and then use the weekly, daily, and monthly as your kind of baseline to see like how is it generally going, or are you actually going to draw each of the other ones as well? Because I was thinking I would just mainly, since I'm trading like a 5 trade right now based off like our work is going to be hourly, so I was going to use the general direction of the daily, weekly, and monthly, but not draw all of those ones as well. But would like to get your perspective on like what's the best approach.
Yeah, for me personally, I find it the strongest is the higher time frame. I actually draw those support resistance, like what is the monthly looking like. Sometimes you don't get horizontal, you get the trend lines. Sometimes you get the horizontals, and then I keep going down, and I might not even draw anything for the hourly. The reason why I don't worry about the hourly is as we go into higher precision entries, because I use Fibonacci, I use that as a support resistance by itself. Yeah.
So you just draw your support and resistance mainly for the higher time frame.
Yes. Now on the trend line, the hourly will kind of give you an idea. Again, keep in mind, on the hourly, we want the hourly to go the opposite direction of the higher time frames, so that we have a good entry, right? We want a pullback or a rally if it's going down, and we want that turning point. So to find that turning point on the hourly, those trend lines how it will help you. But if you're using, for example, the daily support resistance, and when the hourly pulls back to that level, then you say, hey, let me pull the trigger.
Okay.
Hopefully that makes sense.
Yeah, it makes sense to me.
Yeah.
Okay. So Nabi, did you do any other charts, or you just stuck with this one?
Yeah, I focus on AMC
Yeah.
this week.
AMC is not.
Do you have any like other?
AMC is not a very good one to do, because AMC is driven by emotional trading, so it doesn't give you a good practice, right? Because I mean, it's just crazy, right? Like one day it can go up and the very next day it can come back down, and then you don't get a good idea. What is this chart doing? Yeah. So I encourage you to look at additional charts, and the more you practice, the easier these things become.
Yeah, that's true.
Yeah.
Okay.
All right, Manny, you want to share?
And hey, I haven't done more homework. Remember, you told me that I was pretty good to go last time. And I can definitely go quickly.
If you have done something, it's okay. If not,
I have like the continuation of what I've previously done. We can circle back to it.
yeah, sure. I mean, we see a chart.
Okay. Guess we can go back to this one. I think we stopped at some point. Yeah, we can. Maybe we can start here. So I just kind of, if we just look to the right of this, so this is this downtrend. I guess right here, this could be 1, 2, 3, and then you could enter right here. And then as a continuation, you can also 1, 2, and then enter right here. And then keep going to the right. I just took a break here, a lot of consolidation. And it's a couple of weeks old, so I'm kind of trying to think back to what I was thinking here. I'll skip this one right here. Okay. I don't really know what I was thinking there. But another one right here where you can do, technically I could have done, I should have drew this zigzag more because this would have been an entry. So I could have done 1, 2, 3, and then enter right here.
Yep.
Nice little play. But I drew it after and I realized it, so I circled it right here and I just said I should have drew this zigzag line. And then if I had drawn this and entered here, I could have exited somewhere, and then this would have been a continuation. So I would have entered right here. Same thing here. So I could do 1, 2, enter here as a continuation. And same thing to the right of that as well. 1, 2, and then enter right here. Yeah. And then this is just consolidation right here, so I kind of just left it alone.
Okay.
And then I get to draw this last piece right here. This was in this week.
Okay. No, this is good. I think in general you get the idea. Now, what I want to encourage both of you is keep doing this, right? Every week when we meet, we can spend a few minutes to go over what you have done for that week. Then the more you do it, the more you get to practice, and the better. You can see my screen, right?
Yeah.
Okay, so I'm gonna do something. Maybe the viewer has not seen this. So let's say you've drawn your support and resistance lines, right? And just ignore this other side. So we're just going to focus on just an empty chart like this. Let's say you've drawn your support and resistance, and price is coming down, and then you are taking some action, right? You're seeing price do something like this. So when you see this pullback, right, let's just assume this was your 1 down here, 1, 2, and 3, and you're going to enter at the break of 2, right? This is what we've been practicing. So if you have drawn your support and resistance lines, then you would not take this trade. Man, you and I talked about this a couple of weeks ago. You will not take this trade right when price breaks because you're at resistance. Because what could happen is price could just do this and then reverse on you completely. Right? This could happen. So that's one reason why you have your support and resistance at the higher time frames, because those are the strongest ones. So what you want to see in this instance is for price to break, which is fantastic, and then for price to use that previous resistance as support, and when it's now turning around from that support, you take that entry. Yes, you're a little bit late, but you have confirmation. You have confirmation that your decision is right. Remember, trading is about stacking the odds in your favor. It's not about, oh, this was right, I should have stayed. No, it's about, could this be right or wrong? It's about thinking that. So that's definitely an area to look at. Now, if that resistance was there, but this was your drawing, then definitely you take it, right? You definitely take it when you break that line, right? You take the trade. That's okay, because at least you have room until you get to resistance, right? Then you can say, you know what, should I exit or stay in the trade until I make my expected target? But at least you're careful and you know what you're doing. The other thing is, when price gives you this pullback here, is it possible to take another trade here? Right? That's because you've drawn your support and resistance, and you say, hey, this is support. Because this is support, I don't want to wait until 2 is broken. I'm going to enter at 3. Again, this is how we start to think about being more and more precise, right? But it's not just randomly being precise. Is I have my 1, I have my 2, I have my 3. As 3 shows me a sign that it wants to turn around, like if I have 2 green bars in a row, I say, you know what, I'm going to take it. The idea is not to enter at the line. The idea is to enter when price is showing you a reversal, right? So that's the idea. So make sure you're paying attention to that. So that's, as you look at these things, now you can say, hey, I have an earlier entry.
And right there, to get the green bars, Beanie, you go on a lower time frame, right? If you don't see it, like on the hourly or something.
So my pull the trigger is always the hourly, right?
Yeah.
So I don't want to go any lower than hourly. I don't have time, right? I don't have time to look at this for more than 2 minutes in 1 hour. If I go to the 5-minute chart, I have to stay there for 15-20 minutes, right? I don't have 15-20 minutes. right? So I stay on the hour at the bottom of every hour. I just look at it for 1 minute before and 1 minute after for a total of 2 minutes, and my decision is made at that point. And so if at 6:30 it's at the bottom of the support zone, it's coming to the support zone, and then at 7:30 I get a green bar, at 8:30 I get a green bar, at 8:31 I'm entering a position because I have 2 green bars from there. But I'm only looking at it at 7:30 and 8:30. I'm not looking at it in between. So that's key, because for all of us here on this call, we have a very busy day job, right? We don't have that kind of time. If initially, as you practice, you might spend 10 minutes every hour, right? So, but that's okay. But once you have a system in place, it's 2 minutes max. And part of the 2 minutes is also going into your account, placing the order, and then going, right? All of that in 2 minutes is done. That's why we're going to keep practicing, and we'll get you there. So, support, resistance. Very important for you to know, is this turning point a significant turning point? If not, I skip it. That's why I draw it on a higher time frame. The other thing that we talked about is sometimes you'll see price do this. It will penetrate through the support or resistance, it doesn't matter, and the very next bar it does the opposite, and then the very next bar it does the opposite again. So don't get caught in here. This is what's called a manipulation. What manipulation is institutions, they move the markets. So if they want to take the price up, they don't want to start buying here, because if they start buying here, the price is going to run from them and they're not going to get a good entry. So what they want to show you is, hey, I'm going to place a small order, make you think that this is a reversal. As soon as you get in, I'm going to take price down and take out your stop. That's what they will do. As soon as you get in, they reverse it. And then as soon as the people who go down and say, oh, this was not a good support, price is actually going down, they reverse it again. Then they use this as support and then take it back up. Right? So this whole box here, they've manipulated this whole area.
By placing like large buys and
Yeah.
large sells.
Yeah. They're placing different size buys and sells, trick everybody, keep wiping out both sides of the stop losses, and then they take it where they want it because they've accumulated, right? When they wipe you out here, they buy down here. They even are buying better than the support line. They're buying more down here. And all the shorts now are covering. When they're covering, they're taking the price up for them. Because the people who go down, when they buy, they're actually reversing, right? They're going up. So be careful. I'm showing you this to be very careful on support and resistance. That's why I said, a couple of weeks ago to you, Manny, is you don't enter as soon as price gets there. You want to see that price is actually going to, test it as support, break through, test it as support, and then go.
Yeah.
Right? This is key.
So you never enter right after the cross-up break? Technically you can, but like you said.
Yeah, I would not.
You would not.
I would not, because I have no confirmation that this is going to hold.
Yeah.
And if this happens, where it never comes back down and it just keeps going up, I'm okay that I have missed this trade. I'm not going to say, oh, why didn't I enter here? I didn't enter because it does not fit my criteria.
Yeah.
Right? The odds are not in my favor if I enter. Right? Trading is about probability. And stack the probability in your favor. You're going to miss a lot of trades because it doesn't fit your criteria, but you should never rethink about those. Now, if your criteria is wrong and you keep missing trades and there's something wrong, then you have to revisit your criteria. But outside of that, you don't have to worry about that. So I hope this is making sense to you. Right? That's why support and resistance very, very critical in our trading. Even let me take these out. Even trend lines. Even trend lines are important because as price comes down, I just want to get it out of the way. As price comes down to test this trend line instead of testing the support, that's also a good entry, right? As soon as you see a reversal, 2 green bars, you can enter because it's using this as support. Same concept, right? Whether it's horizontal or diagonal, is same concept, right? And when it's when it's coming down like this, you must respect it before you pull the trigger. Right? This is not a good example, but I just wanted to show you, like, even from the upper side, it's acting as resistance. As you can see, price pulled back, it hit it once here, and then once here, third time, and then it finally penetrated. Now you didn't get an entry here because you didn't come to test that to go up, so that's okay. You just skip that trade. In the 1 hour chart, I'll show you something very interesting here. I'll show you something interesting. So let's just really zoom around. I'm just gonna draw this way for simplicity. So you see this line? This line broke through that trend line, right? So let's take this line out so we don't confuse ourselves. Let's just assume these lines are not there. So you have this trend line. This bar here breaks that trend line, so you don't enter, right? You're waiting for that trend line to be respected. This next bar low is actually testing it, and then when you break the high of this bar, you can get in. Right? So I know this is confusing. What we want to see is this, right?
Yeah.
This is what we want to see. But this can be 1 bar when you're looking at the hour chart. Because if, to really go lower, if you go 15 minutes, and if we try to find that, right, so it breaks it and it comes back down this next bar to test it. Kind of hard to see sometimes, but you just have to take those. So here, exactly here, you just have to do enough of this to understand. This bar breaks it, then you get a pullback to this line, close enough, right? It's not there, but it's close enough. You get this pullback and you break this high, you have your entry.
But didn't you just say, like, you don't want to look at because you don't have time? Or is it just
I'm not looking at it for validation. I'm showing you why on the 1 hour. I'm showing you why. go. I'm showing you why this bar here is an entry, because the low of this bar came close enough to this. The low of this bar is not above this previous bar, right? So you know there has been a pullback at some point, right, during that 1 hour. So this low is close enough. Then when I break this high, you see how I drew that line on the 5 minutes? That's this line here. That's breaking this high. I pull the trigger. I have my 1 2 3, my 1 2 continuation in the lower time frame, but I just envision it, right? I don't have to go back to that lower time frame. For practice, you can. Like at night, you can say, you know what? Was this close enough? Let me go to the lower time frame and see that 1 2 3. Boom, I can take it. If not, then you do it on the hour. The purpose why I'm showing you this is you don't need 5 6 bars pulling back and then 2 3 bars reversing to take your trade. It can be one bar that is saying, hey, I'm going to pull back in a lower time frame. I'm actually doing it like in multiple bars, and when I break this high, I take it, because we're talking about multiple bars. So we have 1 2 bar down, and you say if I want 2 green bars, I take it. You can even put it up here, or you can say this is a 1 2, so I break my 1. It's a continuation 1 2. I break my 1. I take it, right? So if you start to understand this, right? I already said this is a low before seeing the lower time frame, right? That's how I want you to think about each trade. Is when I'm on my hour chart, that thing is telling me a story of a lower time frame, but I'm able to envision that without going to the lower time frame, because I only have 2 minutes, right? I don't have time to baby this thing. So I just say, hey, this was a pullback. Like at 6:30, at 7:30, this bar opens down here. I'm already prepared to say that, you know what? If the 6:30 bar high breaks, the pullback has happened already close to this. I place an alert, I go away, and then I take my trade when the alert triggers. So I'm showing you that to say this testing of the previous resistance support can happen in one bar when you're looking at the hour, right? If you're looking at the minute, then it doesn't happen in one bar. But if you're looking at the hourly chart, it has happened within that hour. There were 12 5-minute bars, right? Or 61-minute bars that have done something, that have given you that pullback for entry. I hope this is making sense.
Yeah, it is.
Okay. Can we do it on like a different example, just resonates?
Yeah, for sure. So I will find another chart. I think that's good. Do you want to find a completely different chart? Yeah, let's just go to PayPal. Let's just go to PayPal. Boom. Let's just say. I have this trend line. Let's just say I have this trend line, right? So I break out of this trend line. I don't take the trade as soon as I break out of this trend line. I want to see a pullback. So this bar here is already showing me a pullback. Now, it's very subjective for you to say, you know what, this is too far of a distance, it's not enough of a pullback, I'm not taking it. But if you say, look, this bar has shown me a pullback, as soon as this bar high breaks, I can take the trade, because you've seen that pullback. Or
pullback in the hollow one, right?
Yes, so that's the pullback.
And that's 2.
Yeah. Well, this 1 2 is not your 1 2 3. It's a different. These are different numbers.
I was just referring.
Yeah.
Just to highlight that one. That's what I meant. Like the one that has a 2 under it.
Yeah, this bar here. So if we just put a horizontal line and go to Or let's start with 15, see what happens at 15. Boom, you see this? See this pullback?
Yeah.
Right? Is this pullback deep enough? This is a decision you have to make, right? If it's deep enough, and then you can say, I can take this trade. Because the pullback has actually happened. It has decided, so it doesn't have to come all the way here, right? This guy broke, and then it decided to come down. It doesn't want to come all the way down. It's saying, hey, you know what? I have strengths. I'm just going to keep ripping through this. Right now, you can go to the 5 minutes. And you can see even better here. Right? You broke through it. Boom, boom. And then if you were trading a 5-minute chart, this was your pullback. This too was your pullback. Here was your entry. Boom. But we're not trading 5-minute charts, right? And so you don't enter that. But this is just, again, as an example. You broke through it. It pulled back. It doesn't want to pull back. It wants to continue to rip through. That's what you want to see.
Real quick, before we leave on this one,
Yeah.
would you enter this on right before 9 a.m.?
This 9 here?
Yeah. Press, go a little bit to the left. So would you enter right there?
So I'm not trading the 5 minutes, so it's kind of hard for me to say yes to that. Because on the hourly, this is really where my entry is. This line up here.
Yeah.
Right?
Okay.
But it's a good question. Like if you were trading the 5 minutes, you'd say, you know, do I have 2 consecutive green? I have 2 consecutive green and I break above 95.23, I'm entering. You can say that. But technically, if I were to trade the 5 minutes, I would enter it when I'm breaking this somewhere here. Like I would draw another diagonal here. Right? When I break this, I'm entering. Because I've already seen that this pullback is a weak pullback. And I'm just... This diagonal is not to act as resistance. It's just to tell me, hey, when I break this is an earlier entry than having to wait here. Right? Or this guy here. Instead of entering here, I enter somewhere here. That's what I want to look at. Right? Is it making sense? Yeah. Good.
We talk about risk as well. I don't think we've covered that.
Yes. Okay. Okay. Let's talk about that. Are you guys sitting close to each other?
No. We're on a different floor.
Okay. No, I was thinking maybe that's where the echo is coming from because it's kind of weird, right? I've never heard this echo before. That's okay. Not a big deal. I'll try to clean it when I edit the video. So, risk.
Can we do it on the hourly too? Just so
Yeah.
it makes sense.
Yeah. Here's an example here. Let's use this as an example. Let's say we are entering here. Right? When this is continuation, 1, 2, we break 1 and we're entering. Right? So when you enter a position, your stop should be at the other side of the previous swing. So this, somewhere in this area is your stop. Not right below the swing, but somewhere in that vicinity, right? You want to give it some breathing room. What you are telling yourself is, if I enter at 76.83 and price goes below 73.27, I was wrong in my action. I want out. I want to minimize my loss. That's what, protecting your position is about. And then what I want to do from there is I measure this distance. It's $3.70. So I multiply that by 2, it's $7.40. So my exit here has to be $7.40 is my exit. So 84.13 is my exit. 84.13, just roughly, and then we came 84.13 right there. We might not have exited this bar, but definitely this bar we have exited. So twice our risk. Your exit should be twice your risk. And what is your risk again? Is from your entry to your stop. That's your risk. So twice your risk is your exit. But that's the very, very simple risk formula, right? Twice your risk is your reward. But we have to talk about, we have to spend some time over the next few sessions. In one of those sessions, we have to spend some time to talk about how do you decide your position size. You know, whether you have an account size of $1,000 or $100,000, the way I calculate position size is the same. It's a percentage of my account. Therefore, your account size doesn't really matter. It just, if you have a small account, it prevents you from taking some trades. If buying one stock is going to risk more than the maximum you're willing to risk on a particular stock, you don't take that trade. Right? But that is something we'll go deeper into, how I calculate position size and why I calculate it that way. But this one is very important to know. Right? Before you even go into what's my account size and, you know, how many contracts or how many stocks can I buy, you have to know, I'm risking this much. Can the stock move this much at the very minimum? Do I believe that? Before you take that trade. And the reason I say do I believe that is, if your monthly chart says I have a very strong resistance up here, but my exit is here, do you take the trade? That's a decision you have to make, right? By strong, I mean it has gone here multiple times, months over months, and it has struggled going through it. It went through this one time, but are you going to take a chance, right? Because you're entering here. Or are you going to say, you know what? I know I'm not going to get my full amount. What I want to do is, if price goes there quickly, I'm going to exit. But if price reverses immediately from here before it even moves up, I'm going to also exit. That I'm not going to wait until it comes down here, because I'm making a decision based on a support or resistance that's a headwind that's in my way.
I forgot to ask you this, but kind of like your stop loss, do you also have sell orders right away after you put a position in?
It depends. I usually like to put a mental stop. Especially when you're doing options, it's kind of hard to know precisely what an exit is. Some people like to say, if I lose 50% of the option value, I'm out. I don't like to do that because there's so many factors to calculate option premium. I just like to say, look at my chart and say, you know what, price is gonna go down. I'm gonna be in pain for a while. Like, I took a position a couple of weeks ago. Each contract was $263. It lost more than about close to 70% of its value. But I was out this morning for a very nice profit, like close to 50% profit, right? If I had said mentally that I'm going to get out of this position at 50% loss and put in those orders, I would have lost that money. But I looked at the chart and said, you know what, there's more room to my direction. My narrative is not broken. I didn't hit my mental stop of the stock price, not the option price. Then I stayed. So there's different factors, right? If you're doing straight stop, then you can do automatically. You can put the exit, because you know if it comes down here, you are wrong, right? Then you can exit.
Can you do that as well? And maybe I haven't done this previously, but can you set stop losses based off the stock price for options instead of the option premium?
You get into complicated script type orders, right? You have to write those scripts, or you have to get a platform that really does that, right? It gets a little tricky. I think Thinkorswim, there are ways to do that. I don't want to spend time trying to figure that out. I just know, I just have alerts, right? I have alerts all the time. If I'm taking this trade, I have an alert. Tell me when price gets here. I don't even have to look at it even the next hour, because all I wait for is for that alert to send me a text message, and then I say, okay, price got here. It's time for me to get out.
Nice. And your alerts, are they usually on TradingView, or do you use a separate app?
No, I just use TradingView for my alerts. Right?
Nice.
I just go here and I say, hey, when price gets here, tell me. And it tells me right away.
Nice.
Yeah.
That's very helpful.
I think today's lesson was pretty good, right? I think we went through a lot. Now, we're starting to get into now more precision entries. So we're going to really focus on precision entries over the next few days. So as a teaser, I like to draw Fibonacci extensions. This is really my support and resistance is drawn for me. And so if I want to pull back, I want to pull back between 23.6 and 61.8. My sweet spot is green to green. If I see a pullback green to green, I'm taking a position. Usually the next bar I want to see it, break back up above this green to take a position. But something like this, I might also say, hey, you know what? It gapped up. As long as I don't break below this hourly bar, I can go. And boom, you know what? I was right? I didn't even see it, but they say take this and you have your position. So this is just a teaser.
Yeah, next time can we talk about what that even is in concept? Like
Fibonacci
and
yeah. Oh, definitely.
It'd be good.
Definitely, we're gonna do that before we do anything else. Yeah.
Nice. That makes it life a lot easier if it draws your support and resistance lines for you.
Yeah, I mean, I draw like on the hourly and not the hourly, the monthly and the weekly. I like to draw them.
Yeah.
And then use the Fibonacci's. Or sometimes I just get lazy and I say, you know what? I'm going to draw some Fibonacci on the monthly, another one on the weekly. I have different like line types, another one on the daily, and then another one on the hourly, and my hourly is my pull the trigger. I do that. Like right now, this is the hourly right now on SPY. SPY is pulling back to the 61.8 from this last swing. So as long as it stays above 78.6, we are not in a downtrend for me. So if it breaks that, then boom, it's a new downtrend. So I want to see it hold above 61.8. And maybe 70%, right? I like to see it hold above these two lines, and then I can enter to the upside. To the downside, all I want is rally, break this, enter. Rally, break this, enter. Easy, right? It's all there for me. And I can even say, you know what? I'm just gonna draw a Fibonacci going down. Right? When it hit the 38.2, it didn't keep going up and it reversed. You get two red bars, boom, you take it. Right? You just keep doing that. It just shows you weakness after weakness. You take those trades. But that's why I like to use these Fibonacci's in different time frames. That way, I don't have to draw support, resistance, trend line. It's there already.
Nice.
Okay.
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 The teaser.
Yeah.
We can mentally prepare.
Yeah.